Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode. Joining me today is Henry. You can find him on Twitter at Henry Invests. You may have seen Henry recently on the most recent live panel roundtable with the young guns. So, yes, Henry is one of the younger people in the Div Twit and Fin Twit community. So, Henry, go ahead and give yourself an introduction.
Perfect. Well, thanks, Dave, for having me this morning. I'm excited to be on the podcast, the Passive Income Podcast, and share my thoughts with everybody. A little bit about me. I'm a 19-year-old finance student. You can follow me on Twitter at Henry Invests, tweet about growth stocks, all stocks, general finance. We're just really excited to be here and talk some finance with you today, Dave.
Nice. Yeah. So, again, welcome to the episode. I believe we're up to episode 76. And yeah, I'm definitely intrigued by yourself and some of the other younger investors in the community. Like you said, you're only 19. You're a finance student, so I think I saw you tweet recently that you just finished your first year in college. Is that correct?
Yes, that's correct. Last week, I just
Nice.
finished. So
Well, congratulations. Any big plans for the
thank you.
summer?
Just working, stacking the cash so I can buy the buy the investments later on. So that's basically
Nice,
my plan right now.
nice. Yeah, good stuff. Well, let's just get into the conversation and see where the conversation takes us. Like you
Perfect.
said, uh, invest tweeting about and investing in growth stocks, and I'm quite sure I've seen you tweet about both growth stocks and dividend investing stocks. So I guess
Yeah.
just start with a little bit of a breakdown. Again, being young, growth stocks are probably a great idea for you, and what your mindset is at 19.
Yeah. I first of all, it just growth stocks come with so much more risk, but it also comes with higher reward, right? So people kind
Yeah.
of allocate small amounts to that. I allocate a relatively small amount of my portfolio towards like risky bets. Like I'm 55% ETFs and a lot of blue chips. So I make some small concentrated bets. But I think on Twitter, sometimes that's like the most fun stuff to talk about, or like the super speculative companies,
Right.
get some differing opinions. So I think those are more fun to talk about. But for most people, and for my mindset is uh, investing in ETFs and things that have sustainable cash flow for long periods of time consistently. And so that's kind of what I've been focusing on.
Nice. So again, we'll just quickly point out that you're in the USA. The majority of my viewers and listeners know I'm in Canada. So you mentioned ETFs, and I'm guessing then SCHD is up there in your.
Yeah, so SCHD is definitely up there. It's one of those positions that I've been slowly building over time. I kind of happen to think that dividend names have held up pretty well, and there will probably be like some sort of rotation out of them. So that's SCHD is one that I buy in small quantities, like over consistent periods of time. Whereas some of my other ETFs, I just do like a big bucket drop at the first of the month. SCHD I spread out a little bit more.
Interesting. So, um, I guess just other ETFs before we get into talking about like VU and Vici, anything like that.
Yeah, so ETFs, VU, SCHD, and then the other one I have is DGRO, which is iShares Dividend Growth ETF. And the difference between that and SCHD, SCHD has more like consumer staple, healthcare, telecommunication names, things that are less exciting businesses but have higher yields. DGRO is a growth dividend ETF, so it has a lot of the lower yielding tech names like Apple, Microsoft, and some of the up and comers that have lower yields. So you get more share price appreciation and a lower dividend, but it's also like it doesn't move exactly in line with SCHD, so it's good for diversification. So I really
That's
like those
interesting.
two. Yeah.
Yeah, that's very interesting.
Yeah, I would say everybody just take a look at it, take a look at the holdings, very little overlap. So they're very good complements.
Nice. Uh, Not financial advice, but take a look at it.
Right. Yeah. Don't buy it or anything like that. Just take a look.
Well, buy it if you do your own due diligence and if you feel it's the right decision for you. But
That's right.
we're just two guys talking. An old guy over here in Canada and a young guy down there in the U.S. And
exactly. I wouldn't take any recommendations from me, or you know, but
It, it it's funny geographically, I say down there in the US, but I believe you're actually more northern than I am.
yeah, right. Yeah, actually, good point. I'm in Wisconsin for people listening, so um, I actually might be farther north than you. Yeah.
Uh, yeah, probably. Um, okay, and I've also seen you tweet. Now we'll jump over to the growth stocks. I believe the company is called Upstart. Let's talk about Upstart.
Yes,
Seems to be one
Upstart.
of your
That
favorite Twitter topics.
Yes, Upstart is something that I'm starting to get some recognition for. I got a lot of DMs on that, so I had to turn my DMs off because people were like asking me what the hell's going on when shares fall 2%. Like, I don't know, bro. Like,
Yeah,
but yeah,
the stock market fluctuates. It goes up and down. Like that's the
right.
way it works.
Yeah, it's like people need like therapists for that. But yeah, Upstart. So my very quick elevator pitch for Upstart would be it's an AI lending platform that partners with banks and credit unions instead of working against them. And it offers 84% of the time automated loans that are leveraged with different metrics to evaluate credit worthiness in an AI program. And the data suggests that it approves more borrowers at lower APRs with lower delinquency and default rates. So, uh, obviously, Fed raises rates. I'm wearing the J Powell sweater today, but Fed raises rates. Lending is constricted, so they've kind of been cyclically out of favor. But if you go on my Twitter, I've done tons of spaces and information on Upstart where it's not as bad as people seem, and so I think there's a lot of opportunity there. And shares have doubled since I really doubled down on that on my Twitter. So yeah, it's
Nice. That's
fun.
gotta feel good. So I guess what did it start out at and where it is now, like ticker price?
So, well, it IPO'd at $20 a share a couple years ago, got as high as $400 a share, went round trip all the way back down. So it was definitely an AI bubble hype stock, but I think it's one of those that'll survive. Just recently, prior to May 9th, so like 2, 3 weeks ago, it was trading at like $12 a share, and then after the earnings came out, then the momentum started. Has a lot of shorts. Has a lot of shorts.
So do you know what it's trading at, like as of close yesterday?
Like $23, I think.
Right. So
23, 24.
not far off from its original IPO.
Yeah, no, yeah, definitely. It's been a trader's stock, for sure. But if people
Right.
are interested, Upstart is one of those where like surface level, you think predatory lending because they have high unsecured loan APRs. You think predatory lending, you think AI bubble. Who wants to own lending right now because rates are high? But you realize that Upstart's actually not a lender. They sell the software that can originate the loans. So it's one of those companies where if you spend a considerable amount of time researching it and understanding it, it's pretty, the opportunity is there. It's just a matter of whether or not they can execute.
Right. And will they ever get to the $400 again?
Yeah, I wouldn't bank on that, but yeah,
Right?
I mean, yeah, I mean, yeah, that's all I have to say. I wouldn't bank on that anytime
Yeah,
soon.
no.
But that
Don't
was,
don't 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 dig yourself a hole on that question.
yeah, right, yeah. Also, stuff like this, like I said, these are fun things to talk about, but it's probably not a good idea to put all of your portfolio in something like that that's so
Right.
volatile. Once again, not I don't know your situation, so that's not advice, but you know generally
Yeah.
speaking.
No, it's definitely an interesting company to take a look at and keep an eye on and see where it goes from here because obviously, since the beginning of this year, 2023, AI, Chat GPT and all the other AI platforms have become sort of uh, the talk. Like
Yeah.
it seemed like last year and the year before it was all about Bitcoin and the metaverse, and this year it seems to be
Yep.
all about AI. So that seems to be the hot topic of conversation.
Yeah, for sure. And it's only I think it's only going to get more relevant here as time goes on. Because people are just going to create new buzzwords about AI, like subcategories, like robotics or anything like that, right? I mean,
Right.
Tesla just revealed the Optimus robot, and it was doing some crazy stuff, and then people are talking about that part of AI. Like AI is just a huge umbrella with
Yeah.
like so much underneath it, and there's definitely going to be new things about AI that come to fruition or that are created here in the next couple of years. So
Oh,
it's exciting.
That really, really makes me want Tesla to come out with something called Optimus Prime.
That would be awesome. That would be awesome. I don't know. I think they're stuck between the name Optimus and the Tesla bot. I don't know if they've picked.
Oh, I see. I think Optimus would be much better than Tesla bot. Tesla
Yeah.
bot, well, it just sounds like a bot. And like
Right.
bot,
Right.
the word bot has like to me, it's like a negative connotation.
Negative.
Like
Yes. Yeah.
interesting. Let's jump over to another one that you were talking about when you were on the live panel, which was uh, I can't even remember the name of the company, but it had to do with like space or space
Oh,
exploration,
sure. Rocket Lab.
Rocket Lab.
Rocket Lab. Yeah. So I think most of the listeners are probably familiar with SpaceX, Musk's company.
Yes.
Rocket Lab's kind of like, as cliche as it sounds, it's kind of like a mini SpaceX. So essentially, SpaceX is launching really large satellites into space, and there's a market for smaller satellites that can be launched, and Rocket Lab takes that. So Rocket Lab launches small satellites into space, and all the other part of the thesis with that is they create accessories that would help support like an ecosystem of life in outer space. So like things for little parts for spaceships or to help people breathe, just that kind of stuff. So
Right.
it's a play on launching satellites and space exploration. Balance sheet is pretty strong. So they're not in a weak. They're solvent. They're not in a weak capital position, and they have a founder led. It's a founder led company by a guy named Peter Beck, who is quite interesting. He ate a hat for like an investor day a couple years ago, like a real hat.
Like like the old saying, "I'll eat my hat." So he actually literally ate a hat.
Yeah, so it's on YouTube. He literally took a Rocket Lab hat, put it in a blender, chopped it up, and he ate the hat for his shareholders. So it's pretty interesting guy.
So correct me if I'm wrong, but did you not also mention during the live panel that that they had something to do with cleaning up space debris as well? Because over the
Yep.
last 60 years, we've put a lot of junk into space that's now just floating around.
Right. Yeah. Thanks for bringing that up. Yeah, they do help clean up space debris, which is, I think recently space debris has been more like contained. Like we're not as wasteful when we shoot things up there, but we're putting like more satellites up there now. So just the quantity of how much stuff we're putting up there makes up
Right.
for it, even if it's more efficient. So yeah, and keeping space clean is important too, because we don't know what future operations entail. I'm personally not convinced that we even understand everything about how the implications for all of that. So, you know, not polluting anywhere is probably a good idea. So it's
Yeah.
important to probably clean up some of what we're throwing into outer space. So Rocket Lab helps with that. Yeah.
Yeah, and that's a very important point because space debris, but in orbit that's just traveling literally at say 50 or 60,000 miles an hour, just one little bolt crashing into
Right.
a
Right.
crashing into the space station or something. That's not a good thing. That's catastrophic.
Yeah, it is. It can kill people.
Exactly. So,
Yeah.
yeah, I would agree. Cleaning up all that space junk that we've left in the last 60 years is definitely a good thing.
Yeah. No, it's great. I think too. Space. I've had a very hard time finding people who believe that we will like never have like an increased involvement in space. Like I think everybody believes that we're going to be more involved with the solar system and space and sending things over there. I think what a lot of people disagree on is the time frame in which that
Right.
happens. So like if you think space is going to eventually prosper and be a this place where we have more, involvement and maybe even like some sort of ecosystem up there, there's going to be more than one or 1 to 2 players. So I've seen the thesis that SpaceX is going to take everything. I look, I don't even know if how much space is there in outer space? Like that's your TAM. Like so like there are going to be a ton of people in this industry, and Rocket Lab is one that I think serves this very select purpose, but that purpose has such value and can be used by so many people. So it's an interesting company um, to look at, understand, and yeah, it's had a decent run the last week. I think like 15-20%. So
Right.
it was nice to see.
So I have a couple thoughts there. So, I was a kid in the 80s and, they were launching space shuttles all the time. It seemed like every 6 to 12 months another space shuttle was going up. So, growing up in the 80s, he just thought, "Oh, by, the year 2000, we're gonna have, you know, like a moon base and
Right.
off to Mars and all of this." And then all of a sudden, you know, sort of through your, childhood through the 2000s was when you actually saw some, rovers and whatnot going to Mars, and finally just now in the next year or 2 going back to the moon. So, if I had been a kid or I was a kid in the 80s, definitely thinking, we would have been a lot further ahead than we are right now. That's just sort of my, quick take on that thought.
No, yeah, I agree with you. I think we should maybe it's possible to go farther, but nobody really wants to take that big step. I don't know. I mean,
Yeah.
Elon Musk seems to believe that we can actually colonize Mars. So,
And you know what?
y-
I don't think he's wrong. But again, his time frame might be wrong. Like they're planning
right.
on sending humans to Mars like in 10 years time, and those humans will never come back. Sort of
Yeah.
idea of where, if it's another 50, 60 years down the road, maybe then there is that potential for return trips from Mars, but we'll see how that well, I won't see how that works out in another 50 or 60 years, but you will.
Yeah, I guess that's true. Yeah, we'll see how it goes. Maybe it'll be like a space race, but to Mars again. It'll
Right.
be Elon versus everybody.
I do want to just quickly touch back on both those companies, Rocket Labs and Upstart. So they're basically growth plays. Like they don't pay dividends yet. They're just you're just hoping you're holding them to see where they go. I don't know. Maybe you're accumulating some more over time, dollar cost averaging to acquire some more shares, and you, you're just sort of. I don't want to call them completely speculative bets, but they're obviously a little
They're
bit
pretty they're pretty speculative. I think that's fair to say. Yeah.
nice. Okay, fair enough.
Yeah, and let me clear the air on that. That those two encompass a very small part of my portfolio.
Right.
Very small. Like I said, it's not I, personally, as much as I tweet about them, I think people would be surprised to know how much I hate risk in a lot of my investments. And I think that's solid advice or solid words to listen to for most people out there. Like if some people I see on Twitter like find themselves worrying before an earnings call or before like CPI comes out or something or like company news breaks, and if like you're worrying about that after market close or like it's impeding your ability to sleep, then you're probably overexposed. And the easiest thing to do is reduce your position, and like
Right.
spread yourself out more. So yeah, I don't know, but I think sometimes in the dividend community, uh, people own too many stocks, too
Like
many
too many
dividend
different
names.
companies.
Yeah,
So that's a
yeah,
great point because this topic has come up several times on the passive income podcast where, I've had guests with I think the lowest number is 10. And I believe the highest number is over 70 and every
wow,
number in between. I personally right now I just opened up another position earlier this week. So I believe I'm at 24 total different positions now. So that's companies plus ETFs. I only have, I think, two ETFs. And so 22 companies plus two ETFs at 24. I keep telling myself, Dave, don't go over 30. I think as long as I keep it under 30, that's my comfort number, my
yeah.
comfort zone. Yeah, what are your thoughts? What is your number?
My golden number has been and always will be 25. 25 companies plus ETFs, and that also includes crypto for me. So like
Okay.
Bitcoin would be one and Ethereum would be one, but those are kind of nominal positions. But yeah, I think around 25, you have 2 to 3 ETFs, 22 companies. That's if you're able to obviously keep tabs on everything. Kind of just be like a finance nerd like you and I, just scroll Twitter and figure out what people are saying. But
Yeah.
yeah, I think 20-ish range. I think once you start going over 30, it's a little dangerous because at that point you have so many annual reports and everything to shift through and or sift through, and you may not understand the business as much, can't pay attention to everything. So I think the hedge funds that do it professionally, obviously they manage a lot of positions, so I think that's probably a better strategy for them. But for individual like retail investors, spend a lot of time doing some quality analysis on a decent bunch of companies. The reason I don't go for so few is because like I like to hedge against my own ignorance. Because like I think I'm right on this, but if I'm not, it's very possible. In fact, oftentimes the stocks that we buy, the market is saying we're wrong on. Because if we're buying them at a price that we think is undervalued, so we're telling the market we think you have this wrong, and the market's telling us no, we have it right. And so the whole thing is having an understanding of what you own and what you personally value it at.
I love that saying. I like to hedge against my own ignorance.
Yeah, it's man, people get bias, and I think admitting it is a good thing. You know, we all have hidden biases, and so like I'm not gonna lie, when Upstart started going up last week, I was like, okay, I wish I had more, but I strictly capped myself in case, because how would I have felt if it went down 50%, right?
Right.
And that was a huge risk too. I'm not going to pretend like I fully expected this. So, you know, I really capped myself. Like, I got in 2021 when I first started investing. It was my 18th birthday, which was in late November. If you go to the ETFs or the S&P 500 and you look at when the top of the market was, it was November of 2021, right when I turned 18 and I was able to put all my money into stocks. So I got like wiped out in 2021 pretty bad because I didn't know what I was doing, and you know, the whole market was going down, everybody was panicking, and so I got wiped out because I was in heavily concentrated positions versus now where I'm much more spread out, and so I reevaluated my strategy in like Q2 Q3 of like 2022 or something like that. I think it was around then, and I've read a bunch of books. I have The Intelligent Investor next to me right here on my desk. So
Yep.
that's a really good one. And I read a ton of books, and now I humbly say that I'm beating the market for about the past year in both of my portfolios. So yeah,
So
but
just
not
the
very concentrated.
so just the luck of your draw that your 18th birthday was right at the absolute top of the market,
I
like
know.
all-time
Tell me
highs.
about it. It's a test. It's a test. It's definitely a test, man. Like somebody is testing me, trying to see what I can do. Yeah, it. Those were dark days. I lost a
Okay.
lot of money very quickly.
Well, you did and you didn't, because here's the thing is that, again, 18 years old, you're now 19. Sounds like you're going to be 20 by the end of this year.
Yes. Yeah.
And so over 20 years, the S&P 500, or yeah, has always gone up, right? So
Right.
you're going to look back in when you're, 38, 39, 40 years old in 20 years time, you're going to look back at that and go, "Wow, I've done really well."
Yeah. That's certainly the hope. That's certainly the hope. Yeah. It's gonna
Nice.
be great. I love. I think this is a point I wanted to say on here. A lot of the way that I've been able to invest money, or just kind of like what my strategy has been, is when I turned like 15 or 16, I started thinking, you know, like what am I going to do? How am I going to make some money? And so I started an online eBay business, which went really well, and that kind of kickstarted my uh, business career or like actual finance, getting interested in that kind of stuff.
Your
But
side
the
hustle
biggest
ideas, right?
Yes. Side hustles are great. They're entertaining. They teach you so much. Having gone through a year of college, I'll say I learned more from my little eBay business than I did a lot of these classes. So, for anybody listening, it's worth a shot. But really, when you're under 18 and like you have your expenses paid for the most part, you have a roof over your head, you have food on the table, clothes on your back, you can go to school, you don't have like any bills. That's normally when a lot of people are like screwing around,
Yeah.
you know, just kind of doing whatever because kids are gonna be kids. That was the time period in which I like really, really worked and built my nest egg so that that's where I am today. And now what this gives me is financial flexibility to have fun in my early 20s. As well as like right now, you know, I skipped a couple years really to kind of build while all my expenses were paid for. And now I have a larger cushion, you know,
Yeah,
from
that's
working
smart.
and pocketing the difference.
I wish I had been that smart when I was 15, 16, 17 years old. And I'm sure 99.9% other people would say the same thing, that they wish they had been that smart in that age group when,
Yeah.
like you said, yeah, everything's more or less paid for you. You might be paying a cell phone bill, and that's probably about it, or putting gas in the car when you go out. Hopefully, you're
Right.
putting gas in your mom's car for her at the very
I
least, right?
I have my own car, but yes, of
Yeah.
course I would.
No, that's great
Yeah.
that you were able to kinda set yourself up, like you said, be able to save some cash and then be able on your 18th birthday, uh, unfortunately for you, just buy
right
right
at
at
the
the
top.
top. But like I said, that's going to recover. So over time, you're not going to regret that decision. I can guarantee that.
Yeah, definitely. And it's also about balance too. Like I wasn't like working every day or whatever. If the younger people are listening, like it's okay to go to events and have fun. I know
Yeah,
that's like controversial now with all the stuff I see where it's like you can't skip the gym, you can't skip this. It's like some people drop dead at 30 from heart attacks. And so
yeah,
if you're 15, then for some people out there who are 15, their life is halfway over. Or
yeah.
so like
Or you never know. Like when I was in high school, there was way too many kids from my high school that ended up dying in car accidents.
yeah.
Again, back then, drinking and driving was a lot more prevalent, and I mean, it was still illegal back then. And I think now, 30 years later, people are much more aware how bad that idea is. But you never knew. Like there was at least 10 kids in my high school that died between ages or grades like 9 and 12 when I was in high school. So, like you said, you
Yeah, that's
never know when
crazy.
somebody might be when their number might be up.
Right. That's why you got to live in the moment too.
So I would agree with you 100% when you're young. Like it's okay to go out and spend $20 to go to the movies with your friends, or even spend $100 to go to a concert of like your favorite band, or what those numbers might those numbers might
Taylor
be high now. I
Swift.
don't know how much it costs to go to some things,
Yeah.
but
Like maybe at a zero.
yeah, 200. Um, so yeah, definitely have some fun when you're younger as well. But at the same time, I think you're finding a very nice balance between that having some fun with your friends and being able to invest on the side, or
Right.
perhaps the investing is more of your focus and having the fun is on the side. I don't know.
Yeah, I would say that's where I am. I mean, investing, I have fun investing. Like
Right.
that's really fun for me. Like just following everything, all the new information. I also think like the psychology of investing is just fantastic. Just how people want to buy high, sell low. If the stock's down, people tend to be in more irritable moods for the
Right.
day. Like it impacts that. And so I love learning about it. I love hearing what famous investors say and how they personally handle it. Like I remember I was reading Richer, Wiser, Happier, book by William Green. Great. Anytime somebody asks me to help them learn like stocks or investing or like how I got where I am today, I tell them they got to read the book first, Richer, Wiser, Happier. I've had one person read it, and I've given it to a decent amount of people. So that shows you how much people actually want to learn. Very
Right.
select group, but yeah, Richer Wiser Happier. There's a chapter where Sir John Templeton is on the. He's a famous investor. He's on the beach and he's wearing like a really weird hat and he's got sunscreen all over his nose. Basically, he looks like a dork.
Yeah.
And William Green's writing this down. He's like, "Why is he wearing such a funny hat? Why is he wearing all this sunscreen?" And so then Sir John Templeton comes back. They sit down and they have lunch or dinner. And William Green asks him, why are you wearing that funny hat? Why are you wearing the sunscreen? And he talks about how it's because he says he doesn't care what anybody thinks. And so it's mental practice and it's just him being who he is. It's what he enjoys, what he wants to do. And so I think that's the most critical thing for people is not caring about other people's opinions and really like honing in on what you believe because your
Right.
situation is different than mine. My situation is different than somebody else. So like people are quick to make judgments about investments and we shouldn't do that.
Yeah,
I don't know
exactly. I would agree.
situations.
A couple more topics that I definitely want to go over. Circling back all the way to the beginning when you said I think 55% of your portfolio is in ETFs and blue chips. So I guess what are some of the blue chip companies that are in your portfolio that are those nice, boring, low
Sure.
risk dividend payers that you just invest in, dollar cost average into, and every quarter say thank you for the dividend. Thank you for paying me to not work for you.
Yeah. So there's two dividend companies that I really, really, really love. My favorite non-dividend paying company, my biggest individual position is Google. I happen to think dividends might be coming soon on that. But apart from that, Broadcom, AVGO, Avgo just recently hit 52-week highs. That's one that I've been consistently buying. T. Rowe Price is another one of my favorites. They have a great dividend yield with great track records, asset managers. So I like T. Rowe.
T. Rowe
And then
Price, that's like an insurance company?
it's like an investment management company. They,
Okay. It's an
yeah,
American company, which I'm not overly familiar with. I have heard of them before, but
yeah, they basically they manage a ton of money, is what they do. Portfolio fees, that kind of stuff. So
right.
yeah, obviously that's cyclically out of favor. But my quick thesis on that is if people start investing again and the market goes up, well, the basic psychology, more people are going to want to invest, more people jump in, then their clients, are in a better mood. They don't pull money. So I think that's kind of the thesis on T Rowe.
Okay.
Um, yeah, Disney's going to be paying a dividend soon. They announced that a couple quarters ago. So that's to be on the list. And Vici is my REIT. Um,
Nice.
so that's the one where they're the landlords for all of the buildings on the Vegas Strip.
Yeah.
Yeah, and so talk about pricing power, sustainability. Like if MGM and Caesars don't want to pay, get them out of there. We'll probably get higher rent from somebody else. Those buildings are so valuable.
Yeah, and, I've had several guests here, including yourself, back in the live panel talk about Vici, and obviously that's, from the outside looking in, I'm going, "Wow," like, you own the actual land on the Las Vegas Strip, and I'm sure that the Bellagio and Caesars Palace and Luxor and MGM Grand, they all make
Right.
a ton of money, right? Like, we know gambling, the house always wins, so we know they make a lot of money. We know they have the ability to pay their rent or their lease, and like you said, if one day one of them can't pay their lease, well, somebody else will come in who can,
Goodbye.
right?
That's right.
So,
Yeah.
yeah,
No,
that's a
yeah,
very
it's
enticing
great.
one to look at for sure.
They're expanding into new markets too. And they're doing more and more and more. I think they're trying to do like some hotels too now. It's an interesting company, a lot to be excited about. It's also I don't think it's like you mentioned, like it's got that star value. Like it's not
Yeah.
boring. Like, if it were to be liquidated, theoretically speaking, you own a piece of the building. Obviously that wouldn't happen in practice, but that's kind of like the what's true is you own a piece of the Las Vegas Strip, which is really cool.
Yeah, exactly. There is, we talk so much about just, like, making your investments boring, and that's the kind of the exact opposite because like you said, the Las Vegas Strip is exciting. It's
Yeah.
not exciting for you yet, but wait another year and a
Not yet.
half and it'll be exciting.
There we go. Exactly. Yeah. I got it. I'll wait till they figure out how many Vici shares I'll have by then. That's going to be my ticket in everywhere.
Yeah, nice. High roller at 21 just because you own half the strip.
That's right. That's right. We're sitting in my building. Technically, my building. I own this.
You're like, "I don't own the whole building, I just own, like, a part of that brick over there."
That's right. This very small amount. I own very small fiber of the carpet. That's mine.
Nice.
Yeah.
Um, Another topic we talked about on the live panel, and I was so impressed by your knowledge of it because you were talking about things from 40 years ago, and I'm like, "Okay, obviously he's read up and done his homework." We were talking a lot about inflation, we were talking about,
Yeah.
the Fed raising interest rates, and you were talking about things that happened in the '80s, and I was like, how does he know this?"
Yeah, yeah. So I love monetary policy. That's such a weird thing to say, and I know people are going to be like, "What is wrong with you?" I know, trust me, but like, it's so fascinating. Once again, the psychology behind it too of how Chair Powell makes his decisions, and so I think the best way to learn is to kind of look back at what other Fed chairs are doing, and so. We have the Fed minutes, which is like a recap of every FOMC meeting that comes out after. They're basically a summary of what the meeting is. But I think it's like 7 years after each meeting concludes, the actual transcript of every single word that every single Fed official said is published. And then you can read that transcript, and it's completely transparent because now whatever the economy's like, whatever they said doesn't impact it
Yeah,
anymore.
7
So,
years ago, things have changed, whether it's been a
right,
recession or a bull market or a bear market,
right.
whatever, 7 years changes a
People's
lot in the
moods are
economy.
different. Yeah, and people don't care, people don't remember, so it's kind of insignificant. But if you look back at Chair Volcker in the 1980s, who raised the Fed's fund rate to like 13 or something percent, he was one of the most hawkish Fed chairs we ever had. And so you can go through and you can read little tidbits about what he's saying to board members. And something that he consistently said throughout the 1980s was the importance of the Fed speaking overly hawkish to tame and temper inflation expectations, make sure that people believe inflation is going to be crushed, because that within itself, that psychological effect helps reduce inflation. And so when Jay Powell comes out and he says, yeah, we're still going to raise 2% inflation, we're going to do whatever it takes to get there, he's kind of taken the book from Chair Volcker, where he's very careful with his words, doesn't ever really say anything positive, because the Fed's job is to kind of spook you and get you confident that inflation is going back down to 2%. That's why I think the market doesn't believe them and they're pricing in rate cuts this year.
Interesting. Interesting. So, what's your personal opinion on the next announcement? A hike or stay the same?
I think they'll stay the same. Um, I wouldn't be surprised if they pause this meeting and then the data comes in nominally worse than expected, and then they raise again. I wouldn't be shocked to see that. I think this is a Fed that's still in defense mode, trying to not do too little. And so I think until they get sizable and significant evidence, which is probably another 2 months of data, they're not cutting that Fed funds rate. So my personal prediction, which is not financial advice, and I've said it multiple times, is that we're going to enter a pause here. And as long as the data is good, I think we'll probably see cuts in 2024, summer of 2024, so about a year from now.
Right.
Otherwise, I think they're just going to hold the level, see how it plays out, any deterioration significantly in the economy, stuff like that. But
I think when you were on the live panel, I was mentioning that the equivalent here in Canada to the Fed is called the BOC, the Bank of Canada.
mm-hmm.
And more often than not, and not just this, but almost everything in Canada, more often than not, we just follow the United States because we're like the US's little brother. We just follow you guys around. But um, the last Bank of Canada, they did not raise interest rates. They stayed the same, which was
Right.
a little bit surprising because the Fed had been consistently raising and hiking rates. So that's, for them to do it before the Fed, I think it showed a little confidence I think it showed a lot of confidence in the Canadian economy. And I think it showed that, they were hoping that inflation was getting itself under control. Um, I don't know if it is or not. It does still seem inflation is rampant, that, every time you go to the grocery store, things just cost
Yeah.
more than they did the week before. So
No, yeah, yeah. Do you happen to know if the Bank of Canada is like a buy, or if it's like a non-political body, or does it have political strains?
um, it's supposed to be nonpartisan, but as
Okay.
you know, with everything, and when you get into
Right.
that, there's some.
Yeah. Sure. The reason I mention it is the Fed is supposed to be an independent body in America, an independent body of all of the Congress and government. But Chair Powell was appointed, I believe, by President Donald Trump. So he's a right wing chair, and obviously we have a kind of a left we have a left wing president here. So uh, people sometimes argue that if the chair's party and the president's party are in line, sometimes they'll like help them out or whatever, like easier monetary policy or their influence or whatever. I think Joe Biden is probably worried about a bad economy, and Jay Powell continues to raise, which basically is like disregarding that. So I guess the point I'm making is like maybe in some of those other nations, it's beneficial to not have the economy in a recession, but in the U.S., Powell acts how he wants to. It doesn't matter if he thinks there's going to be a recession or anything like that.
It's a little more political bias because, like you said, he was appointed by a Republican president, so he's Republican, and you now have a Democratic president, and so they're a little bit at odds. Is kind of if I'm getting what you're saying.
Yeah, they're a little bit at odds. So just like if, say, Trump was back as president, I think one could probably make a good argument that Powell might not act the way he does, or it just depends. They're supposed to be non-political. Sometimes they seep in and they are political, and so if rates are lower in other nations, maybe that's political, because I think Canada has higher inflation than the US. No,
Yeah, slightly. I was
close.
actually there's a great Twitter account. It's just called World of Statistics, and they just post all sorts of random statistics about countries from around the world. And yeah, Canada. When they posted one about inflation, Canada was listed slightly higher
Yeah.
than the U.S.
Normally, I think what they try to do is get the Fed funds rate over the CPI rate, which just happened for the U.S. But that's why a lot of people were worried about 7% rates, because they believe CPI was going to stay high. And historically, I don't think inflation's really ever been tackled unless the Fed funds rate was higher than the CPI percentage. So
Interesting. Before we I've got a few more topics before we wrap up. I know we're probably still going to talk for another 10 or 15 minutes, but anything that you want to talk about, anything you want to bring up before any other companies you want to talk about, or anything, just kind of wide open question for you right now. Anything else?
yeah, well, this is a big shoes to fill here.
Big
Um,
opening for you. Just anything.
Yeah, so on Twitter, my Twitter at Henry Invests, I like to talk a lot. I just kind of going back to Upstart. I really like that company. That one's a lot of fun to talk about, and it's intellectually challenging. So it's not one that is like you can easily understand. So you have to spend a lot of time looking at it. And there's some people who are very smart that are bearish on it, and there's some people I think are very smart who are bullish on it. So it's a really fun company to talk about. Talk about it all the time. Palantir is another one. I know that a lot of Palantir shareholders were declaring victory last week because the thing like went up 30%.
So I see that one all the time, and I've never really looked into it. So give me the quick breakdown of what that company is, what it does.
Yeah, so basically, excuse me, Palantir analyzes a bunch of takes in a company's data, mixes it up with artificial intelligence, and then kind of spits out efficient solutions and problem solving and decision making analysis. And so that's a really, 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 really oversimplified thing of what they do. But
Yeah.
essentially, they help companies make better decisions by effectively analyzing and integrating data software solutions. And so they do that for the government and they do that for commercial clients. And basically, it's a huge untapped market. And their CEO, Alex Karp, what he's saying is we're going to be so far ahead that in 2 3 years, when everybody realizes how valuable this is, we will already have the whole market. And so it's kind of a play on data efficiency, cybersecurity, government contracts, but they have a ton of stock-based compensation, dilution. Their CEO is a little weird and nobody understands it. So it moves up violently when shorts cover. And they put out some really good information on earnings. And so shorts have been covering, and a lot of Palantir shareholders are getting closer to break even. So they're celebrating on Twitter.
Okay, interesting. Like I said, I see people tweet about it all the time, and I had just never really looked into it. So
It's a growth stock. So
right.
a lot of work. Yeah. I have a very small amount of Palantir. Just in case every because a lot of my friends own Palantir. And it's like, just in case you guys are right. Like here's some of course I did some research on it too, but it's like just in case I will put some money in here. So yeah.
Cool. Um, I, I want to talk about, like, again. So you're very young, 19, going to be 20 in a few months' time. Well, I guess several months from now. Um, Sort of the same question, but like sort of what's the future for you, and what companies are right now highest on your watch list, and where do like, I know where I see you in 5, 10, 15 years, but I guess where do you see yourself in
Appreciate that.
in 15 or 20 years?
Yeah, so right now, my I guess I'll just start where I see myself in 5 15 years. Hopefully I'm working I don't plan to start a company or anything like that. I want to work as a CFA or a CFP, financial advisor, financial planner, for some large firm. Primarily helping lower income people try and get their like finances in order, and just spread like financial knowledge about all of that. So I think I'd like to do something that's fulfilling, and hopefully I'll have like the credentials to do that by then. So that's important. Financially wise, I don't know. I would hope that I would have a down payment on a home, and a lower mortgage. Uh, when I'm 30, I think I might, if I'm lucky, crack the million mark. Uh, I'm hoping for that. So yeah, that would be where I see myself financially. Ideally, if I continue to do what I'm doing, which I hope to do.
Yeah.
But stocks on my watch list right now. I can pull. I have an exact watch list, but like I said, a lot of what I already mentioned. Always watching Google, T Row. Um, this is a company that's recently trading down. I don't know if you saw the Foot Locker earnings.
I did
Um,
see, well, again, just on Twitter, people tweeting and trying to like screenshots of the chart, and I was like, oh wow.
yeah, it was like a 30% haircut. I, they are not selling shoes or something, which makes sense, I guess. But it took down a lot of stuff today. It took down my favorite ASO, Academy Sports and Outdoors. It's like a sporting goods retailer
Right.
in the southern parts of the United States, similar to Dick's Sporting Goods.
Yep.
Um, that one, it was really outperforming for me. It's kind of been hammered now off the Foot Locker earnings, but if you read their 10K and their investor day presentation, they're continuing to grow and open new stores, so revenue's increasing. They think margins are going to expand soon. They don't think that their inventory is going to be as high for much longer. Really good things coming out of there. They traded a PE of 6, and there's no deterioration in earnings like in sight. They expect to continually compound their earnings, so trades about half the value of the S&P. Just on that, some people are a little spooked because they're having like a new CEO come in. The other one retired, and his name is Ken Hicks, and he did a really good job for them. And so it's kind of like somebody's got big shoes to fill. So we'll see how they do. But yeah,
Right.
ASO is a stock that I'm really watching right now. Academy Sports and Outdoors. It's one I have a lot of.
Okay. Interesting. Uh,
It's a low yield. It's like 0.5%, but they're going to be a dividend growth company. They expect to increase the dividend over time.
so since we were talking about Foot Locker and uh, outdoor sporting goods, this is a little off topic, but I'm gonna ask you anyways. Have you seen the new movie Air about the? It's on Amazon Prime Video. Matt Damon, Ben Affleck. It's about Nike signing Michael Jordan when he was coming out of college into the NBA.
Yeah, I have not. My friend told me literally last night. He said you have to watch it.
Yeah,
so I just, yeah, it's on my radar.
it's definitely a good movie. And like I said, it has really nothing to do with investing, but just we got on that topic of Foot Locker selling shoes and made me think of that movie and Nike. It's definitely, I would say, give it a watch. It's worth the 2 hours of your time.
So is Michael Jordan or LeBron the GOAT?
Well, at my age, it has to be Michael.
I'm with you. I think it's Michael too. LeBron had a horrible playoff game just yesterday. Man, I can't imagine if I had bet on that game. I would have been mad at him, man. He was awful. So I'm in the Jordan camp. I think Jordan's the greatest of all time. Definitely.
I, that 44 behind you was because Jordan wore 44. Like he wore 23. That's what he's known for 23. But he also wore 44, if I'm not mistaken.
It's not a Jordan jersey. Good guess though. It's a Jordan Alvarez jersey. He's a slugger for the Houston Astros.
Ah, I see.
Fun fact. I'm in Wisconsin. The Astros aren't even my favorite team. When I was like 16, 17, I started my eBay business, and it was around collectibles. And so Jordan Alvarez, I watched him in spring training, and you can invest in like certain players in sports cards, kind of like you can stocks.
Hmm.
They're just much more illiquid. And I saw this Jordan Alvarez kid, like, wow, this kid's pretty good. So I loaded up on a bunch of his cards and autographs and stuff. And essentially, he's done really, really, really well. And those cards have appreciated a lot in value. And so, as a token of appreciation for him, I bought a signed Jordan jersey, which is pretty cool. So
Nice.
I'm actually going to the Brewers Astros game this coming Monday in Milwaukee just to see Jordan.
Awesome.
So yeah.
Are you still doing the eBay side hustle or not so much?
Not so much. It's very oversaturated now, and like it's a lot harder. Plus spending, when J-Pow started raising rates, like demand for sports cards got like crushed, all
Right.
discretionary stuff. But yeah, I did it for a couple of years. It was absolutely fantastic, so much fun. I eventually what I did is I set up booths at trade shows and was selling my cards, talking to other people. Great business experience. Really rewarding. Yeah, I have no regrets about it. I would totally do it again. I spent like every day for 2 years on that, so it was so much fun.
Nice. Fun. I'm just going to recommend another movie now because you talked about going to trade shows and setting up selling cards at a booth. And again, it's on Amazon Prime Video. It's called Pez. So do you know what a Pez
Pez.
dispenser is?
Yes, yes, I had those as a kid. Believe it or not, they were
Yeah.
still in
So
style.
this is a story about how there was like Pez Europe that controlled the rest of the world, and then Pez USA that only controlled the US. And so this guy would go over to Europe and literally smuggle in all these Pez dispensers that weren't available in the US and would go to like collectibles trade shows.
Really, and
Yeah, and
sell them.
yeah, so definitely that's another movie for you to check out. You'd
Yeah,
enjoy
dude,
that
I definitely
story.
gotta watch that. Yeah, I definitely gotta watch that. That guy sounds smart.
Well, it was I don't even want to say borderline illegal. It was illegal what he
It
was
was
doing, but
illegal. It was illegal. But I mean, how did he get caught? Or did he get caught?
oh, he got caught. Yeah, you'd have watch the movie. I don't want
Okay.
to no spoilers for you. Sorry.
Okay. That's okay. I'll put it on my list.
Awesome. This has been an incredible conversation. I totally love talking to you and all the other young investors. As you know, I like to call you you guys the young guns because I really feel you are. Well, you obviously are the next generation, the up and coming, and you're setting yourselves up for such an incredible future. Just keep doing what you're doing. Keep dollar cost averaging in. Keep researching the companies. You know, and at your age, sure, take some risks on those, growth stocks, the upstarts and the rocket labs, but
Right.
at the same time, focus on your ETFs and blue chip companies and dollar cost average in and just watch those dividends roll in every month or every quarter. And,
The
you
best
know,
part.
yeah,
The best part.
every month, every quarter, you just say to those companies, thank you for paying me to not work for you. Um, it's not financial advice, but I feel like it kind of is, but I'm just telling you stuff you already know, right?
Yep. Definitely.
Okay, well, with that said, if you don't have anything else to say, maybe we can wrap it up.
Yeah, I will I'll say one more thing.
Sure,
Just kind of hammering home the point that everybody only you know your situation. Everybody has a different financial situation, so
definitely.
it's really fun to talk about finance and get opinions from different people. But I think it's important to understand that you know that person may have had an opportunity you didn't have, or this you don't have that opportunity, or whatever it may be. If you're doing the best you can, saving as much as you can, and you have the right mindset behind what you're doing, you'll get there. Your journey is
Yeah.
just going to look different than somebody else's journey. So don't get discouraged or don't
Don't
think that you're
compare
doing
yourself
better
to
than
others.
somebody else. Right.
Compare yourself to you. Like,
Yep. Am I doing better than I was a couple months ago? Or am I doing better than I did yesterday? And so you couple that mindset with listening and getting new ideas. That's kind of what I'm trying to do myself. Then yeah, then I think you're setting yourself up for the right mindset. And
yeah.
yeah,
And for sure, everybody's, like, you're 19 about to be 20 and you can't compare yourself and the person who is say 28 years old, married with two kids and a mortgage,
right. Absolutely
totally
not.
different situations. You can't compare those two,
Yeah,
so you shouldn't, right?
exactly.
So don't do it.
Yeah, so don't do it. It's comparison is a thief of joy. It's a horrible thing to do.
Yeah, that's a
I
great
only can.
quote.
Yep. I just recently, like I said, when you started reading more books and understanding more, is when I started to kind of try and adopt that mindset of just comparing. And everybody compares himself to others, whether it's involuntarily or So it's just something you got to work on and continuously improve. I think that's a
Yeah.
really big point for investing.
I'll just end off with the pay yourself first concept, right? Of every paycheck, every time you have money coming in, and whether you take $10 out of that or 50 or 100, just pay yourself first. And that's one thing that everybody can do, no matter if you're, like I said, 19 years old or 28, 29, 39. It doesn't matter. You can always take that little bit out of every bit of income you have and set it aside. So,
Right.
and I do love that quote that you just made. The comparison is a thief of joy quote. That's an incredible saying. So
Definitely, people need to remember that. So important, so crucial.
awesome. Well, with that said, we'll wrap it up. I thank you again so much, Henry, for spending some time with me here on the Passive Income Podcast.
Thank
As
you
I
for
mentioned,
having me.
always a pleasure talking to the young guns, and I definitely hope to have you on again in the future. Maybe on another live panel, maybe in
Definitely,
a year
definitely.
down the road, we'll check back and see how your
Do an
journey is going.
update. We'll do an update.
Yeah, updates exactly. So. With that said, we're going to sign off. And if you're still listening nearly an hour later, please be sure to hit that subscribe